The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and The Tech Insider, David White.
And welcome to another wonderful edition of the Power Trading Hour with me, your lovable and squeezably soft host, David White. So we'll soldier on through the show today. We've got a market that is pulling back somewhat, and that is the 1544 area on the S&P cash. We've got about 2.5 billion shares so far, and I suspect we're probably going to end up bouncing a little bit tomorrow, and everything shows that we're probably looking for an expiration around here about 1550 right now. Now, we have some huge earnings after the bell tonight, and that's going to put a lot of color on what we're doing now. We've got Amazon off $8.62. We've got some of the other biggies out here, $10 off. Sale price on Apple today. Google's off of 14, almost $15. Google's options actually suggested it's going to close around $800. A lot of anxiety at Google since Yahoo came out and said that the rates that they were able to get for online advertising had shrunk about 7%. And the thought is that Google's advertising rates had also dropped somewhat. Of course, they don't give everybody the same deal at Google on online advertisers. If you're IBM, you probably get a much better rate than if you're Joe Schmo down the street. But the idea is that the largest advertisers are probably getting a little sweeter deal, and that is from what Marissa Myers said over at Yahoo. So far, we've had about 15%, almost 20% of the stocks that are going to be reporting during this earnings season out. Why 75% of them have made their numbers for earnings per share. Only 50% have made their revenue numbers. And I suspect that is going to probably get worse. Again, the cardinal rule here is to make sure that you make both of those. The belief is that they continue to push more sales in the last quarter to make their numbers on the top line. And the bottom line is probably more likely telling the long-term truth. Why they do this is probably twofold. One, they want to keep the stock price up. Why insiders, especially CEOs, sell into it. The other thing is that they want to please the big holders on Wall Street, who also want to be able to sell before all the bad news comes into the stock. This is going to be a fairly weak quarter. Second quarter coming in the next 3 months. And what we do know is that almost all these CEOs to a tune are saying everything is weak now. We see other things like copper, gold, crude, a lot of things off fairly largely, and I'm putting the blame squarely at the foot of China. China is not growing as fast, at least the numbers they're saying, are not growing as fast as they need to be to make up for the recession in Europe. And, we're not growing all that strong already. But my guess is that we'll be down to negative growth by the end of this next quarter. That Bernanke and all the money throwing around doesn't make progress. You can't tax your way to prosperity, and you can't spend your way to prosperity no matter how much you try. When you take the national funds, and it's no different than going to the deep end of the pool, grabbing a bucket of water and taking it down to the shallow end. You can make people think you're doing something, and maybe they'll even bite at it. But you're just paying borrowing from Peter to pay Paul, and eventually it all catches up with you. The idea, I guess, is that you can make people believe that the market's going up and therefore spend more money. But while we've had slight increases in measured amounts of economic increase, for the most part, it hasn't been anywhere close to the $4 trillion that Bernanke has so far thrown at the market. He, of course, has warned twice now that they are going to throttle the amount of money that goes into the market. I suspect that is because throwing any more money at the market has been deemed not to be worthwhile. One, it will cause inflation, which they don't want to help with. And secondly, they just see less and less QE1 big effect. QE2, okay. QE3, QE4, blah. So why they can cause economic inflation in equities and in things like crude and these other commodities, as soon as they even hint that that's coming out, the bubble will deflate, and I think we're probably going to see a pretty wicked 30 to 60 days as the market corrects, as we find out that Bernanke's helicopters, 747s, C-47s, F-16s, F-15s, everything that can actually fly, is up there throwing money out the back of it, just is not going to matter unless you're truly giving it away. At this point, they are loaning it to people at next to nothing. Maybe that's the same thing as giving it away, but theoretically, those people will have to pay it back. So what do we do? Anyway, in the news today, we've got SIPA, which is yet another Internet security bill that has passed the House just a few moments ago. I dislike any of these bills, and there wasn't a better quote that came out of the hearings and what do they call them, the debate than, I forget who he was, a Republican congressman who said, I'm not worried about our government exploiting and finding out about everything about everybody. I'm worried about the Chinese getting it because you know it's going to get out. That's exactly why we don't want to be giving these companies huge amounts of data on ourselves. Of course, everybody's saying, well, it's for Homeland Security. We wouldn't use it against you. And anybody that's been around knows that it isn't going to be that way, that they are going to use it against us. They'll use it against everybody. S&P's off a little bit more down at the lows of the day, 1451. What we do have is fairly significant volume. Let me update it here. At 2 o'clock, it was approximately 2.5 billion shares. Start getting a run rate here. Okay, first 10 minutes of the hour here, we have about, 2.6 billion. So 100 million in 10 minutes. Moving along, I guess it's okay volume out here, but we'll be tracking it. Google was off fairly significantly. We're seeing Apple down to 391, so it's gone ahead and broken that 396, which was the ABC 1-to-1. Let's take a look at Google first, and I'll get to Apple, and then we'll go to IBM. What we do know is that Google has basically come back to the last major support level, which is at 774. That happened on October 5th of 2012, so not too long ago. We've kind of gone through that today. It had 2.7 million shares. So far, with earnings tonight, 1.4 million shares. But a lot of discussion already that we had a false breakout as we went through the days of the 28th and 4th, and pretty much in that range, 4th of March, 28th of February, through those few days. We would have liked to have seen a lot more volume. You had the first big candle on that day, 3-4. You had the 2.7 million shares. You did have some nice volume at the top, or close to the top, about 4 million shares, and then it rolled right back down and came into this area. So probably not one I want to be short here. I think there are a lot better shorts, especially in the NASDAQ. But this thing could come off extremely hard if those numbers, especially, I suspect they'll make the top-line numbers. What we really want to be looking at is the bottom-line numbers, just what the revenues were, how much degradation of the margins did they have to take for advertising. Bing has started to be a little bit of a hindrance, but not near what the cut from mobile has been. Since you can't show as many responses from a search on a smaller tablet or a phone, they normally get about 45 cents per search with all the people that work on the desktop searches. They can put, 10 or 12 or 15 responses on that first page. Now, secondarily, you're down to about 20 to 25 cents on a mobile search. And that's as more and more people use mobile devices, even tablets, the amount of results on one page that they can actually charge for has gone down. Also, the responses from those using these services have gone down, and they are asking for better rates because of it. You're not going to spend, or most people, let me put it this way, don't spend a couple hours searching away on a mobile device. They may, like me, have a lot of things to look at or search for technically, and I may spend a couple hours Googling away some days. Just don't do that on phones, so you get a lot less of repeat searches. More than once, it's who's the local pizza place? Where's the local place to get my clothes dry cleaned? So you get those kind of searches. You get a lot more intricate searches when people sit behind their desktops, and that generates not only more revenue per every search, but also a lot more searches. And that's what's probably, the metrics on that are probably what are hurting Google today, mostly from the comments from Marissa Myers at Yahoo. So that's Google. We wanted to look at IBM also. When we look at IBM, this thing pretty much had a false breakout. We've been talking about that for a while. The last couple of major highs were in 208 area. That was on May 1st of 2012. We got up to 211 October 5th of last year. Both of those about 2.7, 2.8 million shares. So as we actually look at these, you would like to see, and we did get huge volume as it broke through that high. I have a feeling that was the short covering squeeze. But since then, no volume and no, no real follow-through. What we do know about Apple is that its stock price is highly manipulated by the buyback of their own shares. That a lot of their earnings and earnings numbers have come from drastic drawdowns in the United States, where they're paying their employees 4 times what the employee that is replacing them gets in India. And so is that really them making more money? Is their business getting better, or are they just getting better at controlling the expenses? And the thought is that their business can improve because of the reduced cost of the workforce, but not as the business is getting better, just their ability to cut costs.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And you can always email me at path@tfnn.com. That's PATH. I'll check my email here in the next bottom of the hour if you want to ask a question. Have me respond to some of it. But is kind of interesting. One of my questions is whether or not the SIPA deal in the House is actually going to pass. I know a lot of the senators are going to vote against it, and maybe they passed it in the House because they knew it wouldn't make it through the Senate. But we'll have to look at that. But a lot of these bills would make it very hard on companies like Google, Yahoo, and the responsibility and liability for the data that they collect. In fact, who was the old, I think the Speaker of the House, the gal that was Speaker of the House, was speaking. I forget her name right now. But she was talking about adding additional liabilities for people that don't safeguard their data. And I think those are, you got to make it expensive enough for and to force those companies to make sure that the data doesn't come out, because it isn't a day goes by that we don't hear more about these companies getting hacked and their data and the data that they collect on every one of us going out there. Anyway, as we're looking at the market, I wanted to check on this volume. I thought we'd be more likely to close around 1550. That we're getting this weakness here late in the day makes me think that somebody thinks that they know something. 2.7 billion shares, so the market is starting to roll along a little after it kind of quieted down between noon and about 1 o'clock. We're at 1540 on the S&P cash, 2.7 billion shares. So we've got a little bit of what's going on out there, and a huge move in the VIX again today. What do I have on that? Where's my VIX? 17.50. I suspect this thing's going to go to, the VIX is probably going to go to somewhere just in historic concepts around and implications around 22 to 23. I suspect we're probably going to see that VIX move in the next few days. At 23 is normally where you get a little bit of takeoff. Most people will start betting against higher implied volatility in the marketplace. We've got a call from Max in Houston. How you doing today, Max?
I'm doing fine, David. How are you?
Fantastic. What do you want to talk about today?
Intel.
Intel, as always.
I'm still kind of itchy about it. Yeah.
I tell you what, you're a one-note Johnny. You got to. What other stock you want to look at today? You got to come up with one. I'll talk about Intel, but we're going to have to talk about one other to get you moving.
Okay. Well, everything else is working. The XOP I cashed out yesterday. The DHI and DR Horton and KBH. What is it called? That's working. So everything is working. Intel is not working. I got a June 22 put. But when I was looking at the chart from May last year through now, it looks like it's in a big ABC down. But I'm curious what your perspective is, because at first
the perspective is when this thing's in the 21s, I wouldn't be shorting it to go to the 19th. There's not near the risk reward that was ever available in this stock to begin with. So that would be my first thing. I want to buy this thing. I think it's one of the strongest stocks out there, but I want to buy it when it gets back down to the 19s. But
the 19 bucks, yeah.
Yeah, you're looking at a 10 or 15% move in this stock, and can you make money? Yeah, and maybe we'll see this thing turn tomorrow. But I just don't see. I don't see. I may have had to look at the puts. Maybe they were ridiculously cheap, but I have a feeling that they weren't. I suspect that they were probably.
Yeah.
Go ahead.
I'm sorry, they weren't cheap. I'm in the hole like maybe $10 on that contract. Yeah. So everything else is working though. But
I mean, you're gonna get your money out of it. But I just don't ever see. I don't know where you shorted this thing, but it was probably, if it was at 22, you go into 19 or hoping to get to 19. They'd have to be incredibly cheap for me to ever take that bill. Now, are you watching on Tiger TV?
No, I'm not, because on Tiger TV, I can't see any of your charts right now for some reason.
Oh, okay. Anyway, the last leg back up to where this gap happened, I mean, we're right in it right now. Volume is not all that exciting. So we're going to break here. We'll be back in just a minute.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Baby, let me be your loving teddy bear. Put a chain around my neck and lead me anywhere. Let me be, oh, let him be your teddy bear.
Okay, is Max still there on the line?
Yes, he is.
Oh, okay. Working out of the office today is a little different. Normally I can throw something at the engineer or producer to let me know if someone's still there. But
no problem.
Not a little different today. I have to type at him, and sometimes he's like the slowest typist in the world, too. It takes me like 5 minutes to type something. So I always it's easier when I can look at his face, throw something at the window, and know that something's going on. Anyway, we were talking about Intel. I mean, Intel not doing too bad today, like you said. And if there's a stock I want to go long, I'm going to have a compelling argument to short it.
Yeah.
Are you probably going to get your money back? Yeah. Are you going to make any money? I don't think you really are. As soon as you got your money back, which I think you're going to get, I just go ahead and close out that trade and let the rest of it out. Yeah. So I just don't see a lot in there. Probably the big thing in Intel was they talked about all their CapEx spending. They're going to spend whatever it was, a couple billion or $10 billion or $100 billion, whatever it was. And they're building a lot of facilities that are going to be at least a generation or two ahead of everybody else. They're going to start making custom chips for Apple. They're going to start doing all this stuff. Now, what people hate in the stock right now is that they're spending money. What they won't hate in this in a while is when that spending stops and the money starts rolling. And you're just going to need to give it some time. This thing will come back, and I'm pretty sure this thing's probably going to come back to the $19 range, even if it's slowly. And down there, I think we're probably going to have a very decent buy that could go from 20 to 30 for the next year after that. So I just get your money back and not worry too much about it after that. It's going to pull back with the market. I just don't think it's going to near pull back because everybody else, I think, in the industry sees the same thing I do. They have a line of new chips to come out for mobile. They have the best manufacturing of anybody. They're going to be able to introduce these low-powered chips. Some of them they've already introduced, but the bulk of them will be this summer. And it just doesn't make sense to probably go after the strongest one in the herd. There are a lot weaker ones out there.
Yeah, I understand.
So, any other stocks you're looking at these days?
Well, like on the home builders, you were saying, I think it was yesterday or the day before, that you expected maybe 30 to 45 days of the market going lower, and you were going to hold on to your shorts and puts and whatever.
Yeah, I don't see that you're going to make a lot of money trading in and out of these shares. The one thing that I think you can say about a lot of those home builders, let me see, I haven't looked at them today.
I have another stock if you want to look at something. It's MTU, which is Mitsubishi Bank. And what it is it's a play on the yen.
What's the symbol?
MTU.
M as in Mary, P as in Paul, U?
Yeah, U as in unicorn.
What exchange is it on?
I think it trades on New York. Three letters.
Mary Paul University, right?
T as in Tom. No, it's M as in Mary.
MTU.
T, yeah, MTU. I'm sorry.
Okay, there we go. Mitsubishi Financial Group. Okay.
From that.
Yeah, I mean, if you wanted to buy this thing, it did break out. It broke out with some decent volume. It's coming back to about $6.20. So that would probably be the place to look at this one if it came back. I'm not that big of a believer in the whole Japanese trade thing. They do too much business with China. And in my call, everything in China looks like a lot of that, and especially the banking sector in China could blow up. And I think that's what we're looking at, some kind of weakness in China that is not supporting the rest of the market. I just wouldn't want to, and you know how much business this MTU does in the United States and how much it does in China?
I have no idea.
Yeah, I'd want to probably check that out. Make sure that you weren't buying a ton of hurt for China if that comes out. But they're a Pacific Rim company. Ever since I saw everybody buying huge amounts of puts on the China indexes the last few days, makes me think that they know something I don't.
Yeah, I understand. All right. Well, I'll
look
come
at
up
it
with another idea in the future.
If that comes back down to $6.20 on light volume, I'd probably start doing the research then, see whether or not it's worth it. Right now, it's academic because I wouldn't buy it now anyway. Thanks for the call, Max.
Right. Thank you. I appreciate it. Bye.
You bet. So we'll continue to see this market deteriorate. I wanted to just get back here to this level. We got, bouncing around here this level at 1541. Just wanted to see if we were getting a lot of volume, and volume is starting to pick up a little bit. 2.8 billion shares so far on the consolidated New York Stock Exchange tape. We're seeing a lot of the stocks that the market makers had been trying to hold up over the last few days. I'm actually short some of them, starting to crack out there now. Probably the most interesting one that's cracked out here finally was Amazon. We are short that in the newsletter. And what do we see in this thing? Not the volume, but certainly the breakdown in price today. This thing probably going to get back down to the low 250s fairly quickly. And at that point, we're going to find out whether we get the kind of volume that we're looking for in Amazon. Amazon, of course, just about every endeavor that this company is in, other people are coming in to go after them on. everybody keeps on telling me about how great their web service is, their AWS, and how much money they're going to make off of it. And then the next thing I hear is all the other companies in the same space telling me about how prices are falling. We also know that every day that goes along, on Friday, at least one part, either the House or Senate in Florida passed a sales tax law that's probably going to go through here in the next few weeks on the other side of the other part of the House in Florida. That's another 15 million people that won't be able to buy things from other states without paying sales tax on it. They had a huge advantage for a number of years. That advantage is going away. Of course, they have several businesses selling the Kindles. Of course, they're basically hoping that people buy a lot of stuff on the outside. That's the Razor Blade, Razor marketplace. The question is whether or not they're ever going to make that market pay. My guess is that it's going to pay a little less than everybody has decided that it would. So I'm thinking that, for something, depending on what numbers you want to look at Amazon, this thing has anything from an 80 to a 600 PE. Depends on how you want to fudge the numbers and put them back in. There's some creative accounting on Amazon. It is one of the companies that's been the most successful over the last 10 years and never made any money. And at some point, if you have a good business, you should just be able to make money and quit spending to increase or borrow to fund that increase in size. The problem is you do run into this where your main business is predicated on the fact that you're selling to a lot of people that don't have to pay sales tax, so the shipping isn't a big deal. And I think we're going to slowly see that probably in the next 6 months. I suspect we're going to have, I think already that there's 22 states that are collecting sales tax for Amazon sales, and I suspect probably now that everybody's capitulated, in even states like Texas that are normally opposed to doing this kind of stuff. California, of course, they haven't seen anything or anybody or a bug that they wouldn't tax. So not surprising they did it. Probably a lot more surprising if it goes through in Florida that it went through in Texas, and that we're going to see a lot more of these states, I suspect, in the next 6 months. They're probably going to be up to 40, 45 states that are collecting sales tax on Amazon sales, and that's really going to put the hurt at least on half their business. The web services business, pretty good. Of course, all the other stuff that they sell, they sell awful close to, it's like a giant grocery store. It's hard for me to see this thing not come back and way back. I wanted to get to stocks that went and had moved in the market today. SanDisk was off pretty strong, SNDK. Let's take a look at that. Now, this is a sign of weakness. We started to see it yesterday going in to the earnings. That we see this again today makes me think that a lot of other people know that we're going to be forecasting weaker Q2 results, or Q1, however you want to look at it, the next coming quarter, depending on how the quarters are arranged fiscally for that company. But we've got everything. We've got a huge price move down to $51.52, a bearish engulfing pretty much of a huge amount of trading over the last few weeks. Probably where this thing's headed is the high 46s. You have two previous highs back in the October 19th of last year and September 19th of last year, and that 46 was 46.99 and 46.84 levels are really going to be critical for the support on it. There's a gap on a light volume at 49. Suspect you're probably going to see it there, maybe bounce around a little bit, and then this thing, ABC, back down in that high 46 area region in there. eBay is another one. It's off 5%. SanDisk was off a little over 6%. eBay came along basically finding out that Square is really going after its PayPal business. Again, this is one where they probably hid their lantern under a bushel basket, the proverb from the Bible, but they had a clear and unambiguous sell signal in this. and that was they went over the previous high. That high occurred on February 13th of this year, 9 million shares. Went over it with 7.2 million shares, closed back underneath that a day later, and since then pretty much been pulling back. This thing's probably going to also be back into this $49 level fairly quickly, and if it breaks the volume down there into the 46s. Not a bad business, just that they had PayPal for so long without much real competition. Now that Square's out there, it makes it a lot easier to take money where people used to only take it on PayPal. Being able to take it in regular credit cards opens up a lot of small businesses and websites to taking credit cards that they normally wouldn't have, and the rates are fairly decent. We were talking a little bit about Square, which is the credit card processing company, and Twitter. Both are founded by Jack Dorsey. He was on 60 Minutes, 2-3 weeks ago. But two great companies. And one of the things I did bring up in the den while we were talking about eBay and these other companies, that both of these companies for Jack Dorsey are going to be going public in the next year or so. I think he may be the only guy that will have two companies that he runs that both go public in the same year. It could probably be quite the year for this guy, where he's suddenly worth $12, $15 billion or something. But what we do know is that as the drumbeat for these IPOs comes along, eBay and PayPal all be spit upon. I always like the not the Monty Python thing, not the Life of Brian, the other one. I'll think about it. The Quest for the Holy Grail. They come upon the wonderful castle, and for some reason, I don't know why, but they're French people in a castle in England, and they look over the railing and start berating them viciously and saying, "I empty my nostrils in your general direction." And my guess is that that's what we're going to see on PayPal and eBay up to the line, and the pitch is going to be Square. It's the new thing because, of course, the number one thing that Wall Street does is push paper. And that to push paper, they've got to get the IPO out the door. They make more money on IPOs than just about anything less. That's one of the reasons I kind of thought that the market would still continue to hold up a little bit better. We had 6 IPOs coming out this week. It looks like they're going to shove them all out the door. They've even increased the level of a couple of ones, like SeaWorld, a little bit more. I think they went from 20 to 24 million shares on that one. But I can't really understand that after 30 years in business that you'd want to IPO, but who knows? They really don't need the money to expand. It's more about getting the money out. So one of the IPOs that I truly dislike. Netflix off about $5, not that big a deal. 160, 364. We've got Priceline off about $22. That this thing is broken. That $700 level is pretty interesting. We'll be back after this.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And I don't know if we're still doing it, but a lot of active discussion in the den today about the Monty Python group. Still just hysterically funny. But we'll see how that, the more interesting is the market, because that's the way we make our money. 1537.84 is the last pick on the S&P. So we have cracked yesterday's and the previous lows out here. We are doing it on fairly decent volume. We're approaching 3 billion shares at the moment. Really looks to me like some people know some things. I suspect about earnings after the bell. I don't expect them to be as bad as everybody thinks, and maybe the badness is going to be in already. But I think most of them are probably going to make their top-line numbers up there. It's going to be those revenue numbers that everybody is having problems with, and lets people know that the gravy train is coming to a very slow or a very fast end. Right now I'm looking for the S&P. In fact, let me bring that chart up here for you all. I suspect that we're back headed for the first stop at around that 1475 range. I didn't think that it would happen quite this quick. No. Let me change something real quick here and get that looking correctly here again. There we go. And what we have in this is just the movement, but you can easily see the mark where this came back down. Let me see. What do I want want to go to here. They're 14.85, but I think we're probably going to get down to about 14.75 in this candle from the second day of January, and that's going to be the first stop. But we've had a lot of this, which I'm going to be calling the Bernanke bubble from now on, and that's going to go back into that candle. The low of day that day was, 14.26, but I suspect we're going to get into that candle and blow away that 14.85 minor low from February 26th and get into that candle at least 14.75, maybe a little less. And that's probably where we're going to find the first level of support in this pullback in the marketplace. Now, that may take all the way through May. It may be early next week. I'm pretty sure about the probabilities of that happening now that we know that the top is pretty much in this marketplace. So we'll take a look at that. Oh, I wanted to go back to some of these stocks that are moving. And, of course, in sympathy with Apple, let me pull this back up here. AVGO, this one is getting a lot of pressure, mostly because of Apple, big suppliers of chips to its phones. This one certainly is headed back down to this low. So far today, the volume is not all that extensive. I suspect we might find some lows in a few stocks like Apple in the next couple of days. But this one's headed down to the December 14th low at $30.50. You had about 10 million shares that day, and we're going to probably figure out that that's what we're looking for out here to test, to maybe put in a temporary low in Apple. That Apple actually, let's go look at that today. To see where's my Apple? 390. This thing broke the 396 and has continued to move lower. Opens up a lot of doors if this thing is moving considerably down. Let's see where the next movement on Apple would be. Nope, we're out of time. I'll do that tomorrow. But 396 is where it's flowing through. We've got a lot of room to the downside. See you tomorrow. Same bat channel, same bat time.